Okay, so when we're talking about the usage of time frame, each time frame has its own uses. Like for example, there are three types of, okay, let me put it. There are four categories in which the usage of time frame can be differentiated into. The usage of time frames can be differentiated into three or four parts. Let me show you. Call this building time frame. We have as you can see, I've differentiated the time frame and what I am using them for. I've differentiated the time frame and what I'm using them for. Basically, when I come to the weekly time frame, I'm not doing anything important here. What I'm just doing is just to get the overall direction. What is the market doing generally? What is it building? Like how is it looking at the biggest time frame possible? So I'm just looking at, okay, it's going up. Market is going higher high, higher low, higher high, higher low, higher high. Now if you understand market structure, or if you understand wave, because I use wave to trade, you would understand that after the market has made higher high, what is it about to do? Higher low. If you understand the market, you understand that what the market wants to do right now is to dip, then go up. If you understand market structure, that is what you understand. You understand that, okay, the market has gone high. It's time for the market to retrace on the weekly time frame. Now, there are many things to look at before you can consider the fact that, okay, the change of trend is actually valid, but that is not what I'm trying to talk about today. I'm just talking about the usage of time frame. Let's move on to the next thing. So we have recognized that the market is generally going up, right? Generally going up. Okay, let's go to the daily time frame. Now, the daily time frame is just to get the direction we want to trade in. Do you understand? The weekly time frame is just to look at what it is doing. We're not doing anything on the weekly time frame. On the daily time frame, yeah, you can see it here. It's just to look at the direction we're supposed to be trading in. The direction I want to trade in. Now, from here, from what I can see, is that the market is still obviously what? It is still going up. It's still going up. What is the market doing? The market looks like it is retracing. You can see the market looks like it is retracing. When you see the market is retracing, note that in the daily time frame, you want to trade in the direction of the daily time frame. That is usage of the time frame. Yeah, we're talking about usage of time frame. What you use time frame for? You trade in the direction of the daily. Like me now, once I'm seeing this and that this is a strong sell. Why am I saying it's a strong sell? Because of the way this candle has formed. You can see this is a doji or a rejection candle, then you can see the drop, showing that there's huge sell pressure to the downside, showing that people or the investors or the market is favoring the downside. Now I told you weekly is just to know what it's doing. We're not doing anything there, we don't take any consideration there. But on the daily time frame, you have to look at the direction that is going to hold on for the next few days. That is what you're looking for on the directional time frame. The direction that will hold on for the next few days. Now there are many things that can deceive you on the daily time frame. There are many things that can deceive you on the daily time frame. Like for example, let's say you trade in the direction of the daily time frame and you see this. If you do not know market structure, you will think the market wants to sell up to this level or sell here. No, that is where your knowledge of market structure comes in. One thing in trading is that an idea doesn't stand alone. An idea doesn't stand alone. When you're talking about time frame, you talk about market structure. When you're talking about market structure, you talk about price, talk about trend. Everything comes together in trading. You don't just talk about one thing. So now that I'm talking about the usage of time frame, the market structure you use is going to be very important. Like me now, I trade wave. I know that. And one thing about any strategy you use is that it should be able to repeat itself. The market repeats itself over and over again. So any strategy you're trading, look for how good it is. If it repeats itself, that is what makes up a good trading strategy. But let's move on. So basically, I know that okay, with my own idea and with my knowledge of trading, I know that this market wants to go down. If you look at here, what is the difference? You can see here the sell candle, this black candle is big. But if you look at this place here, you can see this candle is small. So we can see here that okay, the momentum to sell is not strong. This place is not strong, so that one is not valid. But this one, you can see that it is very strong. It is very strong because you can see this huge down candle, meaning the market is favoring the sell side. That is the direction we want to trade it. Since we are seeing this, we cannot confirm that the direction is downward. The weekly time frame, we don't do anything. The daily time frame is to get the direction we want to trade in, and you want to make sure you are right in the direction you choose to trade. You understand? Direction. Look for things that support that direction, whether that confluence is valid or not. So let's go on to the 4-hour time frame. Now that we know that we are trading towards the downside, you come to the 4-hour time frame for what? I said you come to the 4-hour time frame to look for your point of interest map. Look at it, map. You are mapping out important places where you would like to sell from, where you would like to see the market respect, so that you can take a sell. Because we know that in a trend, there's what? Higher high, higher low, higher high, higher low, higher high. That is what you see in an uptrend. So now that we can confirm that on the daily time frame, since we can confirm that the trend is going down, right? This is going down on the daily time frame. What we want to see on the 4-hour time frame is the build up of market structure showing lower low, lower high, lower low, lower high, lower low. Do you understand? Now what we are waiting for, since we have gotten the direction, we want the markets to go up to what level? That is the idea of the map time frame. The mapping time frame, you have to look at what level are you looking for to sell. Now you look which level is valid among all these, because if you want to sell, you have to look at which level the market respects. Now I told you that The market is separated into two. If you watch my YouTube video, you understand. The market is separated into two: the external and the internal. When I'm talking about the external, I'm talking about things like market structure like this. This is market structure. Higher high, higher low, higher high, higher low. That is market structure. That is the external. Now, when I'm talking about internal structure, I'm talking about things like fair value gaps, other blocks where the market will respect. Now, I want to sell. I want to sell. I have to look at two things: external structure. Let me delete this. I have to look at two things to sell: external structure, and I have to look for the internal structure where the market will respect. Now, let's look at this. This is called a rejection block. See this pin candle? It's called a rejection block. Now, the market respects the close. Do you understand? The close of the candle. The market open here, market close. So now that I know that that is the internal structure I'm looking for, I match it with the external structure. I can see that they are both on the same level, like relatively. So I can move it up this external structure a bit. You can see this, right? You can move it up a bit. You can see how the market even respected it here. You can see market came here again, came here, it broke here, broke the level. See this candle, it broke here. You can see this candle, it tested within this range, it's going down. So now I'm expecting the market to come to this level, then sell. As for me, if I were to sell, this is how I'll be selling from. Especially if you have a good knowledge of external structure and internal structure. This is sell around here. Put here as TP. Yes, if you understand external range liquidity to internal range liquidity, there are many things you should learn concerning the external and the internal. So look at this. Me, I'm a swing trader, so I'll possibly hold it for as long as possible. So with this alone, you're already on the right track to know the usage of the time frame and how to analyze. Because when you're talking about time frame, you have to talk about how to use that time frame to analyze. So that is it. You build up your knowledge slowly. Have 3 time frames you use, whether you are a swing trader, whether you are a day trader, or whether you are a scalper. Have 3 orderly time frame you use. You can use the weekly, daily, and 4-hour. If you are a swing trader, you can use the daily, 4-hour, and 1-hour. If you are a day trader, just listen to me. If you are a day trader, you use the daily time frame as your building time frame, the 4-hour time frame as your directional time frame, and the 1-hour time frame as your map time frame. You understand? That is if you are a day trader. And if you are a scalper, you use the 4-hour as your building time frame, you use the 1-hour as your directional time frame, and you use the 30 minutes or 15 minutes for your map time frame. Now I hope you understand that. That is it for this video. I can still type it out if you want to use, if you still want it. If you want it, signify. If you want me to type it out for you, signify.